Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at ALGN, or Align Technology Inc. ALGN manufactures 3D digital scanners and Invisalign clear aligners used in orthodontics and tooth restoration. Here's the barchart.com technical opinion rating for ALGN. The bar chart rating is a 100% sell and ranks in the top 1% of all short-term signal directions. Long-term indicators fully support a continuation of the trend. According to Prime Trade Select rules, the stock is in a bear trend on a monthly basis if the stock price is below the 10-period or 10-month simple moving average. The monthly chart shows that ALGN is well below the moving average line, so the monthly trend in ALGN is down. Now we're going to look at the daily chart. The stock is in a bear trend on a daily basis if the 50-period or 50-day exponential moving average is below the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The blue line has been below the green line since the chart started, so the daily trend in ALGN is down. Sorry about that. Next, we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy puts if the stock price is below the lower Keltner channel line. Anywhere inside the Keltner channel or even above the Keltner channel is fine. ALGN is just above the lower Keltner channel line, so ALGN is inside the sell zone. Sell. Since the trend is down, we want to buy a put. ALGN has plenty of option chains to choose from. We're going to use the May 16 chain right now. The May 16 options have 46 days to expiration. Here's part of the ALGN option chain for May 16. ALGN closed at 159.21 on Friday. That means any puts on the list from 220 to 160 are in the money. We're going to look at buying the 160 put, which is the closest strike to the current price of the stock. The bid-ask spread for the 160 put is 12.50 to 12.90. We try to enter at the midpoints. We'll use 12.70 as the buy price. Our put option purchase calculator shows that if ALGN is flat at 159.21 when the options expire, the 160 put will lose 93.8% of its value. Ouch! That kind of loss can wipe out our trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move down 1% for the put option we purchase to break even and start profiting. Now let's take a look at buying the 180 strike put to see if it qualifies for the 1% rule. Here's the put option calculator picture for the 180 put. According to the 1% rule, we want the put, sorry about that, to at least break even if the stock price is down 1%. The calculator picture shows that if the ALGN stock price is down 1%, the 180 put will lose 11.2% of its value. We want that to be break even or better. So the so the 180 put does not meet our requirements. Let's see if the 195 put will work. The bid-ask spread for the 195 put is 33.40 to 41.40. We try to enter near the midpoints. We're going to use 37.35 as the buy price. The 195 put works. If the ALGN stock price is down 1%, the 195 put will make a 0.2% or $3 profit. That's better than break even, so the 195 put is the one we'll buy. The put option purchase calculator also shows that if the ALGN stock price decreases by 2.5%, the 195 put will make a 6.5% or $242 profit. If the ALGN stock price decreases by is down 5%, the 195 put will make a 17.1% or $640 profit. If ALGN is down 7.5%, the 195 put will make a 27.8% or $1,038 profit. The minus 10% and minus 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the ALGN stock price does not make the expected move down and remains flat at expiration, the 195 put would only lose minus 4.2% or minus $156 compared to the minus 93.8% or minus $1,191 loss for the 160 strike put that we looked at earlier. Now we want to review a put option debit spread, aka a put debit spread, a vertical put spread. For this spread, we want to buy to open the ALGN May 16 expiration 180 strike put and sell to open the May 16 expiration 170 strike put. We're going to base our entry points on the midpoint between the bid and ask prices. That means we'll buy the 180 put for 25.20 and sell the 170 put for 19.25. 25.20 minus 19.25 equals 5.95. So the entry price or debit cost for the spread is $595. The put option spread analysis calculator picture shows that the spread will make a 68.1% or $405 profit if the ALGN stock price increases by 5%, remains flat, or decreases in price when the options expire. If ALGN is up 7.5% at expiration, the put debit spread will still make 48.7% or $290. Creating the debit spread will allow us to collect a $1,925 cash credit to our brokerage account for the sale of the 170 strike put. As we said in the previous slide, this reduces the cost of entering the spread to $595. Here's a note regarding earnings reports. The next ALGN earnings report is scheduled for April 23rd. Let's review the trades one more time. The first trade was a put purchase, set to buy to open the ALGN May 16 expiration 195 put for, no, that's the wrong price. 30, I believe it was 37.35. Why didn't I leave the notes there? Okay, that's the wrong price for the put. It's the right price for the spread. The put price was much higher. I'm very sorry for the mistakes. We'll get this recorded for once, and I'll improve. I'm not used to the short side. Thank you very much. We look forward to seeing you again next week.